This week's guest needs little introduction. He is a legendary business and investing mogul of our time, a Yale-educated prolific author. He co-founded the Quantum Fund and even has his own commodities index and ETF. He's also a prolific traveler, visiting some 116 nations. Welcome back to GRE, Jim Rogers.
I am delighted to be here, Keith. It's nice to see you.
It's very good to have you back. You know, you were last here with us in January of 2019, about 2.5 years ago. We were in such a different place then, Jim. We were in the longest economic expansion in United States history then. You mentioned that short-term interest rates were higher than long-term interest rates, and that could signal a recession. A recession sure did take place. So where do you think we're going in the future? We've had this pent-up demand that could be released post-recession. Do we think we're going to see economies roar with things like hiring and growth? Tell us more.
Well, it has been 2.5 years. Things have changed indeed. I'm in quarantine, as you can probably see right now, and a lot of the world is closed down. But governments around the world have reacted by printing a lot of money and spending a lot of money and driving interest rates to the lowest in recorded history. So things are getting better. They have to get better. I live in Singapore. The airport was closed. Now there are a few flights a day. So that's better than when there were none. But yes, things are getting better. They will continue to get better for a while. The problem, Keith, is that this expansion has lasted the longest in, I'll use U.S. history, in American history. So maybe it's going to go on forever, but unlikely, it never has. And so I suspect sometime in the next few weeks, months, things will slow down again, and we'll have recessions, which we've had since the beginning of time.
There's always an ebb and flow. It's always cyclical. But now, with more economies opening up and this increase that we have in demand, besides all the money printing, the currency creation, like you mentioned, it feels to a lot of people like there are more factors there to have monetary inflation. It's not just the United States that's creating currency like crazy. It's an awful lot of world nations. So what are your thoughts with an inflation outlook? Is that something sustainable, or is that just more of a short-term phenomenon, or doesn't it even exist at all?
As you well point out, nearly every country in the world is doing it at an unprecedented level. In Japan, the head of the Bank of Japan says he will print unlimited, that's his word, unlimited amounts of money. Everybody is doing it, and historically that has eventually led to inflation. I mean, I don't know if you go shopping, Keith, or not. Maybe your butler does your shopping, but the rest of us know that prices are going up. No matter what it is, for education, groceries, restaurants, entertainment, education, prices are going up again. Wow. Now, the U.S. government, and whenever we talk about governments, I'll try to qualify, but the U.S. government says, don't worry, it's not going to last. If you believe them, that things are different this time, that gigantic money printing does not lead to inflation, then you shouldn't listen to me. But I expect more inflation.
Now, interestingly, the term quantitative easing is something that was introduced to a lot of people's economic vernacular back about 12 years ago, coming off the global financial crisis. A lot of people predicted that all that currency creation was going to create consumer inflation, but it really didn't. So do you think it'll really be any different this time? And if so, why?
Well, it did create some inflation. Governments have a tendency and an incentive to lie about inflation for obvious reasons. In the U.S., for instance, many expenses are tied to the rate of inflation. So if the government can say inflation is down, they don't have to pay as much. As I say, maybe you don't go shopping or didn't. Anyway, inflation did come back, and a lot of it went into financial markets around the world. Bonds at the highest level in recorded history. Stocks are booming in the U.S. and most parts of the world. So the money did go somewhere. Some of it went into price increases. Now more of it's going into price increases. I would suspect we're going to see more inflation, but who knows? By the way, it doesn't go up every month when you have inflation. It doesn't go up every week, but over a period of years, you see price increases, serious price increases.
I've heard some people even speculate with hyperinflation. I think that's a bit extreme. Most people's definition of hyperinflation is like with something with what's happened in Venezuela recently, where you can have hundreds of percent inflation per month, not per year, but per month. We haven't had substantial and prolonged deflation since the 1930s after the Great Depression. So a lot of people continue to think just to draw a line, draw the trajectory of where inflation's been and continue to say inflation went out over deflation, but inflation will stay relatively low, relatively muted. What are your thoughts there?
I don't see hyperinflation, certainly not in the US or in most countries in the next few weeks, few months, maybe even few years. But it does not mean that hyperinflation cannot come back. It always has in some countries. And it probably, right now, if you go to Zimbabwe or Venezuela or some places, they're having hyperinflation. So it can happen. Probably not in the US, probably not in most countries, but don't think it cannot happen. Don't say it's so different this time that we cannot have serious inflation, even if it goes back to what it was in the 70s. That hurts a lot of people.
Now, when you were with us here last time, you predicted that interest rates were going to go higher. They've gone lower. But I think you were talking about the long term when you were giving us that outlook. And of course, inflation and interest rates are positively correlated. So if we do get higher inflation, it will take higher interest rates and the Fed raising those rates to tamp down on inflation. Is that all congruent with your outlook, higher interest rates and higher inflation in conjunction with each other?
Well, that's usually what happens when you have higher inflation. People demand higher interest rates in order to use their money. So it's probably going to happen again. Yes, I would expect that. And you are correct in what you said. What I was talking about and what I'm talking about now is, interest rates went down in the U.S. for 40 years. When they turn around, they're going to go up and they're going to go higher for a considerable period of time. I'm not very good at market timing, so I don't know. Maybe you have to watch Get Rich to find out when it starts.
That's right. A lot of people are doing that right now. Now, we focus here a lot on the United States housing market, Jim. We're largely a real estate investing show, so we're very sensitive to things like interest rates and inflation. And interestingly, with what's happened with house prices, I don't think a lot of people would have predicted this great capital appreciation run up that we've had, especially in times of recession. Jim, I've been pretty quick to point out to my audience that on a nominal basis, real estate prices appear higher, but in a sense, they're really not when it comes right down to consumer purchasing power. And the fact that most people buy a house based on the payment and that payment's affordability more so than they do on the capital price. Inflation adjusted home price is not any higher than it was in 2006. Then you've got the lower mortgage interest rates, even under 3%. And of course, wages are higher than they were as well in the 2006 peak. So with American homes now, for a new home, the median price being in excess of 370K, do you think American homes are overpriced, about right priced, or below price?
Well, you know better than I do, Keith, that location, location, location. I'm sure that for some parts of New York, they're overpriced. I'm sure that in some parts of Nebraska, they're underpriced. Just depends on where you are and what's going on. But back to what we were just discussing and what I think I said before is, if you can get a mortgage, a 30-year mortgage or a long-term mortgage at fixed interest rates, I strongly urge you to do it during this period when interest rates are at historically low levels. Because if you can lock it in, you're going to be very, very pleased when interest rates start going higher and higher and higher again.
Yeah, that is a really good point. Of course, it's kind of ridiculous to talk about a national real estate market in the United States where we have 400 or so MSAs, metropolitan statistical areas. So indeed, some places in the inland, the American heartland may be underpriced, where now it's more practical for those people to leave Manhattan or leave San Francisco and move to some of those lower price places that can feel like they're underpriced. But yeah, you mentioned it, Jim. Tying up the long-term fixed interest rate debt is something that we are fans of here, because especially if we get higher inflation, it's going to debase that debt for you and just inflate it away, even if you didn't pay down any principal.
And your rates are going to go higher. I assure you, in the next few years, I said to you before, interest rates went down for 40 years in the United States. Maybe they're going to go down for another 40 years. I'm skeptical. I'm very skeptical. I would expect that the interest rate trend will be higher in the next several years. So lock it in now if you can.
Well, many have felt that interest rates really couldn't go much lower. They continue to edge just a little bit lower. Don't know how much longer that is sustainable. Of course, at some point, we need to raise interest rates if inflation does kick in and become higher. So is the Fed really between a rock and a hard place? Must they raise interest rates sometime? But is that going to cause a lot of problems in the economy because so many people have so much debt that could be unsustainable for everyone from consumers to municipalities to federal governments to pay higher interest rates on their debt?
Keith, you are exactly right. But what will happen is the Fed, the central bank, will raise interest rates a little bit. They will tell us that it's good, it's a sign of a strong economy, and that we should be pleased. But eventually, the market's going to take over and take control away from the Federal Reserve, and the market will raise interest rates higher and higher because the market's going to say, listen, guys, we know what's going on. We've seen this movie before. We know how it ends. And the market will take interest rates away from the Fed, take control away from the Fed. And that's when the problems get very serious. And that's when we have a recession again. But Keith, I want to remind you, we've had recessions since the beginning of time all over the world, and we will again. Even if some politicians say, don't worry, never again will we have a recession. They've got Ivy League educations, but don't believe them. Don't believe them. I assure you, we will have recessions again. And Keith, the next one is going to be the worst in my lifetime. And I say that not as an alarmist, but in 2008, we had a serious problem because of too much debt. Since 2008, Keith, the debt has skyrocketed everywhere. Even China, which had virtually no debt 20 years ago, now has lots of debt and will have bankruptcies. So don't think it's not coming back, and don't think it's not going to affect a lot of people.
Now, I was listening to you closely, Jim. Maybe I'm taking you too literally. Did you say that the market could be the ones that set the rate in the future rather than the Fed being the one artificially setting these rates? Did I understand you correctly? Tell us about that.
The Fed will be a participant. The Fed will be a huge participant and perhaps the most important. But yes, I'm saying to you that central banks do have a lot of power, but at times in history, the market has taken it away. Central banks around the world try to fix currency prices. You know, they say that the pound sterling is worth this, the euro is worth this, the yen is worth this. But sometimes the market will say, because central banks, again, try to fix prices. They try to protect their jobs and they try to protect the politicians. But there always has come a time when the market says, no, no, no. That is not what the euro is worth. The euro is worth this or whatever it is. And then they take control away from the central banks. I have learned that if you bet against the central banks, especially when they're absurd, you're probably going to make money. And the same happens with interest rates. I know, listen, don't think I don't know that central banks are gigantically important and powerful, but I also know that the market has more money than the Federal Reserve.
Now, this is a paradigm shift for a lot of people, Jim, including me, to think about the fact that the interest rate setting policy could be taken out of the hands or largely out of the hands of the Fed and controlled by the free market. A lot of capitalists will tell you that government intervention in the free market stifles capitalism. When you do things like fix wages, you get higher unemployment. Or when you do things like you impose rent control, pretty soon you get dilapidated neighborhoods because, for example, no landlords have any incentive to improve property because they won't get any more rent. Is that similar to the Fed controlling the interest rate rather than the free market controlling what prevailing interest rates should be?
Keith, you have learned your lessons well. You have observed and understood and seen what's happening. Yes, that's the way the world has always worked. Maybe now the Federal Reserve has power that even I don't understand and we don't understand. You know, there is a theory around called MMT, more money today, and that means, oh, this will never be a problem again. I hope so. I hope so. But for a few hundred years, 1,000 years, we've always had problems periodically. I suspect we will have them again. And MMT may come along and they may print staggering amounts of money, but in the end, that's going to make it worse. That's going to make the value of money go down a lot.
That's a good play on words. Of course, MMT is modern monetary theory, and you just called it more money today. So why don't I just play devil's advocate? What's wrong with more money today? Why not just pave over the world with money? Won't it solve all of our problems?
That's what they say, and it's wonderful. People always come up with theories when things are bad. There was a guy named Marx who came up with a beautiful theory. It sounded wonderful, and a lot of people tried it when things got bad. I mean, nobody wants to be a Marxist anymore because we know it doesn't really work, and people are going to try MMT when things get bad, and it will look okay for a while. Just keep printing, and everybody will say, free money. This is wonderful. This is good news. But, and maybe it is different this time, Keith, but most things, always, when you have too much of it, the value goes down. And that with money.
There's your recipe for inflation. Tell us more about MMT, modern monetary theory. We have not talked about it on this show at all before. What's the premise there?
The premise is that you don't really have to worry about balancing the budget by selling bonds or raising taxes. The premise is that if you need more money, that you print money. And as long as you do it without abandon, with some kind of sense of responsibility, everything will be fine. You don't have to raise a lot of debt. You just print what you need. I mean, it's magic. It's magic. It's magic, Keith. Everybody's going to love. Everybody that hears it now does love it. But reality will have to set in someday. At least reality always has set in the past.
Inflation would actually be good for a lot of us leveraged real estate investors, and we've tied that asset with long-term fixed interest rate debt to a cash flowing asset because it'll debase away our debt, and it will inflate our asset values of real estate, holding that value relatively against the deflating dollar. I know you've had a lot of affinity for agricultural real estate in the recent past. Do you still hold that? And what are your thoughts about agricultural real estate investing today?
Let me just go back to your statement, which was very true. It will work that way if you have fixed rate debt. If you have floating rate debts, even though everything is being inflated to better prices, better levels, you are going to get hit with much, much, much higher expenses. And so maybe your neighbors are going to be better off, but anybody with floating rate interest or interest rate debts will suffer badly. But to agriculture, yes, I'm very optimistic about agriculture. Agriculture has been a disaster for 30 or 40 years. The average age of farmers in America is 58.
Yeah, gosh.
Japan is 66. Keith, more people in America study public relations than study agriculture. Agriculture is a nightmare. That is changing now, in my view, for various reasons, partly because we're running out of farmers all over the world, not just in the United States. And that's going to lead to better times. Either we're not going to have clothes anymore and we're not going to eat food anymore, or agriculture is going to get better.
Long term, it's great to invest in mandatory needs. People need to live somewhere with housing. People need to eat food with agriculture. What's a good way to play agriculture? If you want to invest in something agriculture, what's your favorite way in order to be a profiteer from that as far as an investment vehicle, Jim?
I said before, Keith, maybe you should buy property in the Midwest or in the agricultural area. If you're in Canada, you know the agricultural areas everywhere in the world, because farmers are going to be better off. And so for prices in those areas are going to go higher, whether it's for houses or farmland or whatever. That's what you should be looking at. It's one way to play. By definition, inflation means higher prices for cotton, for corn, for copper, for gasoline, for everything like that. So you can participate by buying commodities. Commodities scare a lot of people, but there's no reason to be scared. There are ETFs that you can buy commodities very easily. If you own agricultural ETFs and the prices of wheat and corn and cotton go higher, you're going to say, wow, this is fun. I'm making a lot of money from inflation. I'm making money from inflation.
From a fundamental supply demand standpoint, agriculture can make a lot of sense. The Earth currently has 7.8 billion people, going to 11 billion in the year 2100. So a rapidly increasing population, at least worldwide, still for the next 75 or 80 years, while at the same time, the amount of arable land is going down. So you talk about demand up and supply down. They're just some of those basic fundamentals within agriculture. And then you have to get in where you fit in with your preferred crop type or nation you're going to invest in and so on.
You have learned your lessons well, to repeat myself. Yes, But Keith, even if the population doesn't go to 10 million or a number like that, people are becoming better off. And as you become better off, if you're having no food or food once a day or something, you're going to eat. First thing you're going to do is eat more and eat better. And so the demand for agriculture will go up, even if the population stays somewhat level.
As nations continue to develop, they get more sophisticated tastes. They eat more of these foods where it takes a greater energy density to produce them, like meat and so on. So that's a great point. Even with the same population, a stable population, there is more of a caloric demand. More people can afford it. I want to change gears, Jim, and get what your thoughts are on cryptocurrency. That's something that you and I have not discussed before. Despite the recent pullback in, say, the Bitcoin price, the Bitcoin is the cryptocurrency with the greatest market cap. We still had a 3 to 4x run up in Bitcoin in just the last year alone. El Salvador recently came out and said they're going to make cryptocurrency legal tender within their country, although within practice, I don't really know that much is going to change inside El Salvador or not. There was recently a huge Bitcoin conference in Miami where you had 50,000 attendees and prominent speakers like Ron Paul and Twitter CEO Jack Dorsey and the Winklevoss twins and so on. So, you and I talked about inflation earlier in the chat here. One way people like to hedge against inflation is increasingly with a cryptocurrency like Bitcoin, where there is a finite supply of 21 million Bitcoins. What are your thoughts? And is cryptocurrency like Bitcoin a legitimate way to hedge oneself against inflation?
Well, first of all money is going to be on the computer, Keith. There's no question. It already is in China. You can't take a taxi in China with money. You have to have your money on your computer. It just doesn't work otherwise. We've had hundreds of cryptocurrencies already disappear and go to zero. More will go to zero too. We have thousands of them now. Maybe they're all going to work. It usually doesn't work. The world usually doesn't work that way. So money is going to be on the computer, but in my view, it's going to be government money. When the US money is on the phone, on the computer, I don't think the US is going to say, okay, this is money now. But if you want to use their money, you can use their money. That's not the way governments think, or politicians, bureaucrats don't like to lose control. They like to keep their monopoly. And I suspect that will happen again. So if these currencies, any other, become viable as currency, I suspect the governments will step in. They always have. We'll see. But Keith, I want to say, if you're good at trading, and these are nothing wrong with these as trading vehicles right now, and if you're good at trading, do it. But if you think you're going to have the new US dollar, I suspect you're not. There will be a new US dollar on the computer, but it's going to be theirs. I would love for there to be alternatives, but that's not the way governments think.
You bring up a good point that's actually lost on a lot of people. I'm talking about Bitcoin, which is, I'll call it the most successful and well-known cryptocurrency. Yeah, but how many thousands of cryptocurrencies are out there that died, that went to zero, that don't even exist anymore, and that people lost money on? No one's talking about that because they don't exist anymore.
That's exactly right. And many, even Bitcoins, have been stolen from people's wallets, et cetera, et cetera. It may well happen, Keith. I'm skeptical. I would prefer to have what governments approve of as money right now. Because if they make it illegal, I certainly am not going to use the alternative currencies. I'd rather be poor and out of jail than rich and in jail.
Some wonder if cryptocurrency can really be shut down. Maybe this is somewhat analogous to an Executive Order 6102 from about 90 years ago, when physical possession of gold and silver was made illegal by the United States government and confiscated. I mean, you could still own it, but it just wasn't legal to own it. I mean, can cryptocurrency be shut down? Is that realistic?
Well, the crypto people say it's not realistic, that they can outsmart the government. They also said it was anonymous, but as you know, in the last 2 or 3 days, that they have found that there was a big heist recently where they closed a pipeline. They demanded money from a pipeline. They got it. They were paid in cryptos. Well, the government tracked them down and has gotten it back now. So the idea that everything is anonymous and can be shielded from the government is being proven wrong more and more every day. So it can happen that the government can do a lot of things. I mean, I don't particularly like this at all, not at all, Keith, but governments do have that power. Can they shut it down? If they make it illegal, most people, and me and others, will not use it anymore. And also, I want to go back, recently in Myanmar, for instance, they just closed the internet. Well, without the internet, you don't have cryptocurrency. Recently in Texas, there was a gigantic storm, and for 4 or 5 days, there was no electricity. Well, without electricity, you don't have cryptocurrency. You can go down to the shop and say, look, my money is on my computer, but my computer is inaccessible. This guy's going to say, I know you need bread, and I would love to give you some bread and wheat, and everything, and some beans. But you got to give me money. I'm sorry your computer's down. I'm sorry electricity's down, etc. So the government can do all sorts of things, whether we like it or not. And I don't like it, but facts are facts.
I guess when the electricity's down, it would be difficult for one to do transactions even in their nation's currency, right? I mean, even with, the digital dollar really being the most common form. But yeah, with crypto, there is no physical form to fall back on. So, well, Jim, you've had a lot of wisdom. You've published so many impactful books over the years. You've traveled to so many nations. So, I'd really like to know, what do you think that a young person should know today, whether that has to do with investing or personal development or anything else, maybe something that young person's not thinking about? What should they be thinking about or investing their time in?
Everybody should invest their time now, especially in knowing about the world, preferably a second language. Because in the world in our lifetimes, in your lifetime especially, is going to be much, much different. I grew up in the United States where nobody cared if you didn't speak English. But in the next 50 years, next 100 years, it's going to be important to know a second language well, and it's going to be very important to know about the world. Most people, when I was a kid, didn't know where China was, didn't care, didn't need to know. But that's 50 years ago, that's 80 years ago, that's 100 years ago. That world is gone. So I would suspect everybody, or urge everybody to learn about the world as much as you can. I recently ran into a woman from China, who didn't know that Beijing was the capital of China. So there's a lot of ignorance out there. And if you don't know about the world in the next 50 years, you're not going to have an advantage. You're certainly going to be at a disadvantage. So I would learn as much as you can about the world outside of your own country. I would learn about possibly residing, living outside your own country. And I would certainly try to learn another language if you can.
You're preaching to the choir. One of my degrees is in geography, so I often think spatially. And yeah, you're right, Jim, especially here in the United States. I'm sure it's only a minority of people that could adequately point to Brazil on a map, or Spain, or Myanmar, or South Africa, or any of those sorts of places. And it's increasingly relevant in an increasingly globalized world. Well, Jim, do you have any last thoughts for our audience?
To your point quickly. Most Americans cannot find the Pacific Ocean on them. They say, who cares where the Pacific Ocean is? Well, they're going to learn. They're going to learn. My advice to everybody is to watch Get Rich, listen to Get Rich, because difficult times are coming. You need to get knowledge. And once you get knowledge, you'll get worried. And once you get worried, you'll do something. You'll start being prepared. And the people who are ready will come through difficult times in sparkling colors. Many people got rich in the Depression in the 30s. Most didn't. Most lost a lot. But if you know what you're doing and you're prepared, you will come through the next very bad times with flying colors, and you'll be rich. So get ready. Do your homework.
Be rich in finances and in knowledge. Well, Jim, if our audience wants to connect with you and learn more about you and your books and all the teaching and the investing that you do, what's the best way for them to do that?
I have a website, jimrogers.com, but I don't have anything to sell. I've had a lot of fun in life, and I've had many adventures and had a few successes. I've also had some failures. You can go to my website, but I don't have anything to sell.
You can learn more about Jim at jimrogers.com. Jim, it's been fun talking about the past, the present, and our outlook for the future. Thanks so much for coming back onto the show.